This is all about the TPI, however, reported the growth in outsourcing in some markets like Asia Pacific. The TPI said that the outsourcing declined worldwide by 18% to 16.4 billion US dollar in the second quarter because of weak demand in the Americas, and an overall drop in the number of large contracts awarded. Sourcing data and advisory firm. The President for Information Services and the Chief of the Marketing Officer at TPI, Jean Capel, said that the total contract value in the Americas was down 51% in comparison to the same quarter last year. According to the conference call, the decline of large contracts with a TCV of about $500 million had its biggest impact on the Americas, Keppel said. Then the TPI said that even as there was a big drop in the number of large contracts with a minimum value, the Asia-Pacific market saw TCV grow by 55% over the same quarter last year. The global decline in outsourcing, Indian service providers like Tata Consultancy Services or the TCS and Infosys have reported strong revenue. In profit, growth for the second quarter as they are seeing a surge in demand for their services. Then, according to the International Reporting Standard, the TCS, India's largest outsourcer, said last week that its revenue for the quarter was $2.4 billion, up by 34.4% from the same quarter last year. Siddharth Pai, partner and managing director of TPI India, in a phone interview, said that even as the overall market shrunk in the second quarter, Indian service providers have been increasing their share of the market. A large number of the contracts that go to Indian providers are of value lower than $25 million, which is a market that TPI does not cover, he added. Then Keppel said a stepping up of global outsourcing business is expected in the second half of the year, as current contract pipeline suggests an improvement in global TCV for the remainder of the year. The TPI said there is no indication that the Americas will return to the glory days of outsourcing. In contrast, the growth in EMEA and Asia Pacific will continue, though there could be some blips in China and Europe. This is likely to hit the Indian providers who are still dependent on the Americas for about 60% of their revenue. Many of them are trying to expand their operations in Asia Pacific, particularly in China and in Europe.